Hi everyone. What you see on the screen here is Bloom Energy, symbol BE, one of the best performing stocks of 2025, an energy supplier for AI companies, up some 300% in 2025. And right now, I want to show you a simple way that you can stay in some of these true market leaders by using the 21 exponential moving average as a guardrail. And then the second step is to add a 50-day simple moving average guardrail as well. That sounds complicated perhaps, but it's not. It's really easy. My name's Joe. I'm a professional full-time stock trader with 29 years of trading experience. And this channel, this secret little niche on YouTube, is for serious investors and traders who want to outperform the market every single year and who are willing to do the work. This isn't some get rich quick, find the latest blockbuster stock and go all in channel at all. If you're looking for a channel like that, then this is not for you. So let's jump in now. Not investment advice, just for entertainment purposes. Let me show you, first of all, let's find the buy point. And let me show you where to put your initial stops, and then we'll do that guardrail I talked about. So just a sec. Okay, so what I've done here is I've just covered up a piece of the chart with a Word document. So here we are at the bottom of this kind of tariff flash crash here in April. Broke out of this base to the downside, meandered on the 200-day simple moving average. That's that green line. Eventually, institutions started to buy. Little break out of this congestion zone here, but coming right into the 50-day. We don't want to buy it there. We want it to test it. And then right there, demand hammer here, and then powerful full bar, so to speak. This would have been a chance to put on a piece right there. Even though you're beneath the 50-day, second time it challenges it, a lot more likely it's going to break through, especially this ghost line is the S&P 500, especially with the general market turning up. So let's say we pulled off that, and then also we've got this convergence of the 50-day and the 200-day. So here would be a great add-on spot. So let me put those on. Hold on one second. Okay, so here's our two buy points. And initially I'm going to put my stop at the low of the day because I do not trust the market at all at this point. And at the previous low, which is just a couple percent and about 8% on those two stops. And what do you know? The trade works. So now we want to talk about that guardrail. So the trade is working its way up, and let's add another bit right there. We can do perfect add-ons here because we're in pretend land, right? So powerful breakout comes into this congestion, tests the 21-day exponential moving average and bounces. That's where we can set up our guardrail. So let's move our second stop right to here underneath that exponential moving average, which is going to function like a guardrail on a street, right? To keep us on the road. Let me just interrupt myself. Over the years, I have decided that the moving averages that work best, for me anyway, are the 21-day exponential moving average, the 50-day simple, and the 200-day simple. The 50 and the 200 are pretty much standard. There's a lot of subjective arguments over that tighter range average. Some people do a 10-day, some people do an 8-day, etc. I do the 21-day. So we put on our guardrail, all right? And now all we need to do is, actually at this point, we are up about, let's just see. Hold on, I gotta flip that. We are up about, 15% or so in that original piece. So let's move our stop to break even right beneath the 200-day there. And so with our guardrail, we're going to tell ourselves, we're going to force ourselves not to sell this these two add-ons until it convincingly breaks and closes beneath the 21-day. Not an intraday shakeout, but a convincing close. And if it prints some sort of spinning top doji on there, or undercuts and is sitting there, I mean, it's all in art and subjective, but probably we're going to give it one more day. But let's look what happens. It just keeps going up. It's above that 21-day exponential moving average. Tested here, tested there. And what we're going to do now on this big extension. Now, one thing that I do, which I'm not going to show in this video, is I sell pieces into extensions. So in real life, I'd be selling a piece here, I'd be selling a piece here, but I'm not. That's not the purpose of this video. So at this point, we are about 50% above our buy points. So now what we're going to do, let's move that guardrail up. Let's put it up here. And let's put this one, let's trail this one now. Let's put on a second guardrail. We'll put it beneath the 50-day. Now, assuming you have some profit cushion, it's really important, in my opinion, to give it some wiggle room. That is, you don't put it right on the 50-day line, and you don't put it on the 21-day exponential moving average. Rather, you understand that these lines are not lines at all. They're areas, and we close out positions based on convincing closes beneath them, because a lot of times you will get a little intraday shakeout, sometimes for several days in a row. So all we keep doing now as the trade progresses is we just keep moving up that guardrail. And look at it today. So today we'd move the guardrail here, then we'd move it up to here, then we move it up to here. And look, we've got a ton of room to let the stock come in now. It can pull in 30% and still stay above that guardrail. Now, I know what you're thinking, a 30% drop would be really difficult to stomach. Well, you just follow your rules, because sometimes stocks can go up way higher than you could ever imagine. And oftentimes these stocks will stay above their 21-day exponential for months and stay above their 50-day exponential literally for a year or longer. So we have the good fortune of riding the stock, and let's move our second stop up, which I guess is our first. Let's move our first stop up beneath the 50-day, and I'm going to give it a bunch of wiggle room. Now, the caveat, or the exception, of course, is if a news announcement comes out that something fundamentally terrible has happened to the company, then I'll sell right away. Or, if something globally happens, let's say there's, I don't know, a huge war breaks out, or a huge typhoon, I don't know, whatever. Then, of course, I'm going to just get out. But otherwise, I just follow these guardrails. And then ultimately, there's a third guardrail, isn't there? And this is when the way I'm able to hold stocks for years is by ultimately, when you get a big winner like this and your buy points are beneath the 200-day, you can add one more stop. Stop number 3. And you put that beneath the 200-day, and then you just let it run. And as it extends or gets parabolic, you keep taking pieces off, but you keep a core piece until it violates these stops, or there's a huge fundamental jump the shark moment in the company, or there's a big, obvious bear market, like the 2008 bank crisis. Rears its ugly head again, something like that. So that is my system for staying in big winners, and this has really helped over the years. It helps you take, when you have rules like this, it really helps. You're still going to feel the emotions of fear and greed, but it helps you ignore those emotions and, like I said, stay in those stocks until and not get out prematurely. If you enjoyed this video, I do a lot of this training type videos with my Patreon members. I have a Patreon community where I show my portfolio and focus list every weekend. And like I said, I do training videos like this and blogs throughout the week. There's a 7-day free trial. We'd love to have you join us. If you are interested in that, there's a link in the description of the video, and there is and also one in the comment section. And I am partnered with Seeking Alpha, where I go and get do a lot of fundamental analysis. You might want to check out Seeking Alpha Premium. There's a link in the description below. Read some of these articles about Bloom Energy. Thanks for listening, guys. I'll hit the thumbs up if you could, and I'll see you in the next video.